Wall Street was named after a wall that was built by enslaved Africans to keep the Lenape people of New York away from their land. They built this place on stolen land. The Lenape people had lived on the island that they called Mannahatta for thousands of years until the Dutch West India Company stole it from them in 1626. The Dutch West India Company had been bringing enslaved Africans to the settlement starting in 1626. It was slaves that cleared the land, it was slaves that built the wall, and it was slaves that laid the road that you now know as Broadway. Then in 1711 they opened an official slave market on this street. This slave market is the origin point of the financial institutions that today are still operating, still collecting fees, still managing index funds that hold your pension, and still sitting at the door of the temple taking their cut. The banks that grew from Wall Street, the institutions that would become JP Morgan Chase, Citibank, Bank of America, Wells Fargo, they were all built on slavery. Not near slavery, not during slavery, on it. Their founding capital came from financing slave plantations. These banks would insure enslaved people as the planters' property, process the proceeds of slave-produced goods, and even accept enslaved people as collateral against loans. The profits these institutions made from slavery were never returned. They compounded over 200 years. Those slave profits are still compounding now, inside the same institutions, under the same names, on the same street. Enslaved people were never compensated. Their descendants were never compensated. The banks that collected their fee at the door then are still collecting their fee at the door now. And this is where your pension lives. The first IPO in history was a colonial extraction vehicle. The stock market, this system of selling shares in a company to the public, was invented in 1602 by the Dutch East India Company. The stock market is not and has never been a neutral mechanism for raising business capital. It was invented to fund conquest. Article 10 of the Dutch East India Company's founding charter stated that all residents of the Netherlands could buy shares. Anybody could invest, anybody could profit, but what they were investing in was colonization, armed trade excursions around the globe. The Dutch East India was a monopoly granted by the Dutch government. It was allowed to trade, negotiate treaties, imprison or execute people, and wage war. They established colonies, they enslaved populations, they built settlements and governed through violence. The Amsterdam Stock Exchange was the world's first stock exchange. The people who designed this system were the wealthiest merchant families in Amsterdam, and they wrote two classes of participants into the founding charter. Please excuse my Dutch pronunciation. The two classes were bewindhebbers. It's
Bewindhebbers. Bewindhebbers.
bewindhebbers. Bewindhebbers were these guys, the merchant governors who ran the company. They decided what territories to invade, what populations to enslave, which monopolies to enforce, and they set the prices that the second class, the participante, could buy and sell shares at. The bewindhebbers controlled the books. The participante could not see the accounts. They had no legal right to audit the company they technically part-owned. It was the participante that were actually providing the money that was funding the military operation, the ships, the forts, the colonial administration, by buying shares in the Dutch East India Company. The only people who benefited from this design were the bewindhebbers. They got to use other people's money to build their private empire. They took fees and salaries from the company regardless of performance, and they operated without any accountability to the people whose money they were using. The risk was all socialised through the government back onto the Dutch taxpayers, the same participants who had bought shares. When operations were profitable, they received a small dividend, and when they were not, they absorbed the loss. This two-class tiering became the template for every major corporate structure since. It is still the case that the shareholder, the retail investor, bears most of the risk. Shareholders of retail stock cannot remove an executive unless the board agrees, and the board is appointed by that executive. The circuit is closed before any shareholder enters the building. If you think you have a say in any of these corporate strategies that you hold retail stock in, they are laughing their way to the bank at you. The Participante could not remove the Bewinnthebers in 1602, and Musk cannot be removed by SpaceX public shareholders in 2026. Every time somebody bought a share in the Dutch East India Company, the Bewinnthebers got more money to spend, but their control and power never shrunk. They never had to share any control or power with these new investors. It didn't matter if it was one new investor, 10 or 1,000. The Bewinnthebers still made every decision. The only thing that grew with each new investor was the pile of money that they controlled and the number of people that they could blame if it all went wrong. This created a mechanism where you could raise money from thousands of people simultaneously by giving each one of them a small stake, enough that none of them had individual leverage over you, and still keep all of the decision-making power for yourself. The smallness of each individual stake or stock is the point. No single participante could ever own enough stock to demand any accountability from the executives. But the ruling class, the Bewinnthebers, owned enough that collectively among themselves they were able to block any challenge to their power. The stock market did not democratize investment. It industrialized the extraction of capital from people with no power by people with all the power. That is what liquid actually means. The Bewinntheber could access new money continuously anytime they needed more capital, simply by issuing more shares. Find new buyers, take more money, but always staying in control. The supply of money available to them was only limited by how many people they could convince to buy in. 400 years later, this system remains completely unchanged, and it is why Musk is a trillionaire. The Bewinnthebers paid themselves generous salaries, commissions, and private trading profits. They controlled the accounts, and they let the books deteriorate, and the participant could not see them. By the time the scale of the corruption was visible, the entire company was insolvent and had to be bailed out by the Dutch government. Meanwhile, the British East India Company had taken the template and started running the same operation in parallel. Same extraction, different administrative wrapper. The capital that had accumulated from 2 centuries of the Dutch East India Company and the British East India Company did not just disappear. It moved into the British and then American banking system. The stock market was the spine of the transatlantic slave trade. No stock market, no slave trade. Slave voyages were funded by investor syndicates operating on the same principles that the Dutch East India Company had created. Pooled capital, distributed risk, no liability for the individual investors. The wealth that funded the legal and financial architecture that protected slavery came from slavery, and the institutions that held that wealth, the banks, wrote the rules that governed the corporations. And the corporations use those rules still to access public money without accountability. The stock markets today still use that two-class principle that was written in 1602. This is one continuous unbroken line. The index fund that holds your pension today was designed by institutions built on slavery and exploitation. The bank, JP Morgan, collecting fees on the SpaceX IPO, used to accept human beings as loan collateral. This is not historical context. It's the same institution, the same money, the same family surnames, the same legal structures. SpaceX makes that two-class structure explicit in its S1 filing. And I will do a follow-up video where we look at that S1 filing together. Your pension bears the risk if SpaceX collapses, but you have no power to vote him out.